The stock market, following a bearish start to the week on Thursday, rebounded on Friday on the back of a rally in shares of oil companies, driven by a slight improvement in global crude prices. The benchmark KSE-100 index shot up as soon as trading began and crossed the 34,000-point mark, but selling pressure, stemming from concern over a surging fiscal deficit, wiped off most of the gains. At close, the benchmark KSE-100 index recorded an increase of 235.81 points, or 0.70%, to settle at 33,931.23. An expected 216 rupees billion subsidy for the power sector in the federal budget for FY21 pushed stocks up. However, rupee instability against the dollar coupled with pre-budget uncertainty dented investor sentiment. Profit booking was witnessed towards the end of trading. Nevertheless, the KSE-100 index managed to close with gains. JS Global analyst Mars Muller said bears were defeated as the market remained in the green zone and closed at 33,931, up 236 points. The benchmark index opened positive and rose to a high of plus 353 points as institutional participation was witnessed in main board stocks, he added. On the news front, the government raised 168.8 billion rupees through the auction of Pakistan investment bonds (PIBs), exceeding its target of 125 billion rupees. Moving forward, we expect the market to continue to exhibit similar behavior and recommend investors to book profit in the short term, the analyst said. Moreover, the federal government was likely to earmark 216 billion rupees in subsidy for the power sector, including K Electric, in the budget for 2020-21, to be announced in the second week of June. Top volume leaders were TRG Pakistan, Unity Foods and Haskell Petroleum, cumulatively contributing 62 million shares to the total volumes. During the trading session, Oil and Gas Development Company (OGDC) plus 3.3%, Hubco plus 1.9%, Lucky Cement plus 2.4%, Pakistan Petroleum Limited (PPL) plus 1.7%, and Abbott Laboratories plus 7.5% were major movers of the index. Arif Habib Limited, in its report, stated that the market traded in the positive zone, which was primarily caused by a slight improvement in international crude prices as compared to Thursday. Exploration and production and oil marketing companies largely remained positive. Cement and banking sector stocks also rebounded from recent lows. Cement sector stocks saw attrition of 10% in the past couple of sessions, from recent peaks, and gave an opportunity to investors for a comeback, especially on Friday, the last trading day of the rollover week, the report added. The pharmaceutical sector, on the contrary, slid down with Feroson's Laboratories hitting its lower circuit. However, the technology sector continued to move upwards and posted high volumes with trading in 34.3 million shares, followed by cement companies 26.7 million and Vanaspati firms 25.8 million. Stocks that contributed positively to the index included OGDC plus 53 points, Hubco plus 32 points, Lucky Cement plus 31 points, PPL plus 24 points, and Abbott plus 16 points. Stocks that contributed negatively were Engro minus 34 points, Nestlé minus 26 points, MCB minus 16 points, Pakistan Tobacco minus 11 points, and Paseo minus 8 points. Overall, trading volumes increased to 233 million shares compared with Thursday's tally of 194.7 million. The value of shares traded during the day was 10.2 billion rupees. Shares of 341 companies were traded. At the end of the day, 191 stocks closed higher, 131 declined and 19 remained unchanged. Unity Foods was the volume leader with 25.8 million shares, close at 13 rupees and 45 paise. It was followed by Haskell Petroleum with 19.5 million shares, at 14 rupees and 74 paise, and TRG Pakistan with 16.5 million shares, to close at 28 rupees and 55 paise. Foreign institutional investors were net buyers of 76.1 million rupees worth of shares during the trading session, according to data compiled by the National Clearing Company of Pakistan. Thanks for watching. Please like, share, subscribe. Comment your thoughts on the upcoming scenario of Pakistan's economy and the upcoming budget.